Silver has been the best performing commodity of 2016, and in appreciation of our listeners, Palisade Radio and Palisade Research are giving away a free American Eagle 1-ounce silver round each and every week for the rest of the year. Just visit palisaderadio.com and enter your email for a chance to win. Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. And before we get started today, I want to announce the winner of our silver giveaway. It's Alexander from New York. Just a reminder to all of our listeners, go to palisaderadio.com and sign up for a free 15-page report on silver investing. You'll also be automatically entered to win a free silver ounce round that we're giving away each and every week. And this week on the program, we have a new guest, Lior Gantz. He's of Wealth Research Group. For those who don't know, Lior has been called a thrill-seeking entrepreneur by his team. He's built numerous successful businesses, traveled to over 30 countries in the past decade, and he just has a lot of valuable knowledge. Now, a little bit about Wealth Research Group, if you're not familiar, they offer a lot of content online. In fact, a lot of listeners of Palisade Radio also might be familiar with their work. Some of it's focused, or quite a bit of it's focused around the mining business, and they really surround themselves with some of the best people, constantly talking to guys like Keith Neumeyer and Marin Katusa and Doug Casey and Rick Rule, and they have a lot of new content every week. And there's a program called Steroid Stocks that goes out to their free subs. And if you're familiar with this, you'll know just how good some of the deals that Lior and his group pick. Lior, welcome to the program. Thanks for coming on.
No problem. Excited to be here.
I guess let's start off with a macro picture for those listeners who aren't familiar with your work. I think you have a lot of the same thoughts that we do on what's happening in the world right now. There's been this big discussion on particularly precious metals, those who invest in gold, whether we're going to see inflation. And a lot of times it seems like inflation's picking up, but then just, for example, the jobs report that came out most recently made it seem as if the Fed might be able to hike and that inflation isn't here again. Lior, what do you think about inflation, what we're going to see over the next few years?
Sure. If you don't mind, a little history lesson here. So going back to 1971, the gold window was closed by Richard Nixon. Basically on 15th of August 1971, the entire planet went on a fiat monetary system. Before then, from 1944 to 1971, every $35 were equal to a single ounce of gold, and the entire planet was working under this assumption. Now, in the 60s, the U.S. government overtly used up a lot of the gold reserves and printed a lot of money to fund these, the wars in Vietnam and Korea. And basically in 1967, 68, the other governments were becoming very suspicious that the U.S. can really fund everything that they're doing with the amount of gold that they have and still have it on a $35 to 1 ounce ratio. So they demanded a gold audit, and obviously the U.S. couldn't have done it. So they simply closed the gold window temporarily. Obviously, it's been 45 years since then. And then we had this massive accounting period in gold and silver where they went up in exact proportion to the money that was printed. So gold went to $850 an ounce, silver went to about $50 per ounce, and this was 1980. Then a huge credit boom began in stocks, basically real estate, etc., driven by these this excessive demand from baby boomers in the U.S. And in the year 2000, this demand has really stagnated and now even stopped because these boomers are now picking, they're about 60, 65 years old. The youngest of them are about 50, 55. So these people have already bought their cars, bought their stocks, bought their real estate. Now they're looking to take it the easy life. So we're seeing a huge deflation since the year 2000 in private money, private sector borrowing. And this monetary system, fiat monetary system, is only good if there's inflation. If there's no more currency created than being extinguished, then this system is basically debt. It's just debt only. Just think about it. If you create a currency, if you create new dollars via the Fed or the commercial banks, Wells Fargo, etc., what you're basically creating is new IOUs. And if there's no new currency to pay for the interest for the old currency and pay for the tax receipts for all the deficit spending that the government's doing, then you're getting a massive deflation that's basically going to reset the system. So they have to replace all this debt with government debt. That's what you're seeing right now. The Fed is basically giving the US government money in exchange for bonds because the private sector is not borrowing so much. You can think of yourself, and people your age, you don't borrow that much, if at all. People are afraid of debt today. And so this system right now is deflating on the private sector, which is about 80% of the currency supply, and inflating on the government sector, which is about 20% of the currency supply. So it's a huge battle between inflation and deflation. People ask, how is it possible that there's so much money being created and there's no runaway inflation? And it's because that there's the other side of this equation is deflation. And this is a very risky time, because if the government owns so much of the currency supply, you're getting to a place where they can trick the entire currency supply. They can use it to their own advantage, their own benefit, special interest groups, etc. And I believe that we're going to see more deflation and on the private sector side, and more inflation on the government side. And essentially, governments, they don't like to say, hey, we failed. Obviously, the Fed can't say, hey, we failed. This entire program that we built up since 2008 with the QE, zero interest rates, they're not going to admit failure at any point. So they're going to continue this and even get more creative, maybe send you coupons to spend money. They're going to try and circulate money throughout the people instead of admitting failure and reverting to another possibility, if that answers your question.
Well, that's great, Lior, and many arguments have been made for the last 40 years, ever since we did go off the gold standard, as to why it was a bad idea and how it could lead to a scenario of inflation. Many people have said that no fiat currency has ever worked long term, and that they typically don't last more than 40 years. But for those people that are speculating in gold, and especially gold stocks, timing is key. And since people have been arguing for disasters a result of government policy for so long, the question is, when is it going to happen? Your writing seems to indicate, and your work indicates, that the end game is near. Do you believe that we're getting closer to that point?
Well, here's the thing about the mining stocks. Their bottom line, their profits are fueled a lot by oil prices. So if you want to speculate wisely in mining shares, this is a great time. Deflation is a good time to make a lot of money in mining shares, because their expenses are really low. In deflation, the wages for the workers go down. The expenses for everyday items, especially oil, is down, and you can see oil prices around 50. They're not 100 like they used to be during the bear market. So their profits, their margins are getting bigger, and people don't understand this so much. And this is a good time to really make this analysis. Oil is the largest expense for producers, for construction stage companies. If you're building your mine right now and your mill, etc., this is a great time, because base metals have been real cheap for a few years, and wages are very stable. And if you're an exploration play, that's also awesome for you. The reason is all your costs, basically the geology, etc., is very, very affordable, because there's not too much excessive money inside the industry. There's not so many companies because of the bear market. So service providers don't charge huge premiums. So it's a great time for mining companies, but very volatile. You have to do so much research in order to find what we call steroid stocks, which is superb management and really good flagship projects, or our other niche is takeover targets, where we find companies, small cap companies, that are adjacent to large cap companies, and they can easily and really reasonably be taken over for a large premium by these companies. If you are able to position yourselves before even the rumors of a takeover start, you can make insane amount of money.
Lior, let's talk a little bit more about the macroeconomic issues globally that you see potentially leading to gold prices going higher. Before the call, we were talking about what was going on in China, and then a lot of people aren't aware, but there's an Italian referendum on the 4th of December that could pave the way for Italy to do what the UK, what Britain just did not too many months ago, and what you see that could do to the EU.
Well, the EU, the premise behind the European Union is the same premise that led to the formation of the United States. When you have so many markets opening up for trade, you're going to make a robust economy. So with the UK leaving, UK, you got to remember, they had their own currency, also the pound, and they're an island. They're not in mainland Europe. But Italy is part of the G7. And if they leave, this will shape Europe for the next for the next century probably, because after Italy leaves, France is going to want to leave. The Netherlands are going to do the same. Basically, this could be the end of the EU, and obviously, safe havens like gold and silver will be explosive. And if they don't leave, nothing happens to the big picture. The ECB is still printing a lot of money. A lot of new euros. The EU, the entire EU bloc, their demographics are horrible. They have an insane amount of benefits to pay to their elderly, and the elderly didn't produce a lot of children. So you got families that are about either one child or two child at average. So the tax receipts are not sufficient to meet these benefits for the retirees, and you're going to see a lot of unrest in Europe. And you already seen it in Greece and Spain, other places where they can't afford to pay these retirees if they don't just print it. So everything is bullish for gold and silver during these next few years, and I can't see any other resource or a natural resource, a commodity that is even remotely close to what can happen in gold and silver in Europe. With regards to China, Colin, their appetite for gold is obviously insane. The reason is, if they ever want, and they will want their currency to be backed by as much gold as possible, they need to quadruple their gold reserves. If they want to meet the U.S. gold reserves at about 8 tons, they only have about 2 tons right now, 2 million tons, obviously. So their appetite for gold is insane. They are all across the planet sending representatives to take over mines. They do their own mining, obviously, inside the country, and they work with Russia to buy a lot of gold from them. This is not going to stop. And if anything, since October 1st, since they were added to the basket of SDR, they will want to issue new bonds. And for people to want their bonds, countries to want their bonds, they will need to show that their currency is stable, and stable means gold. And obviously in Asia, if you're a student of history, China has been such a huge empire during the 10th, 11th, and 12th century that they know gold is what it takes to build a robust economy and not printing cash. It's such a complex issue that right now with their trade deficits with the U.S., that they just have to present themselves as a viable gold country in order for other countries to stop buying U.S. treasuries and start buying Chinese bonds.
Well, you made a very key comment as far as I'm concerned, and that's the fact that if other countries do not leave the EU, or if other things don't transpire that we're talking about, that does not change the case for gold. I've felt this way since January or February when things started moving up. But even before that, as time went on and gold continued staying at a low point and even dropping over the last few years, it felt as if every situation that could pop up would be good for gold, and yet everything was already in motion to make gold prices go higher. Of course, mining stocks will follow gold if they go up. Do you see anything at this point that could deter this gold bull run, or are you firmly in the belief that this is real and that we have a few years at least ahead of us for gold to be the place to be?
Well, Colin, from the year 2000 till 2011, gold prices have moved up every year. So what happened was there were so many people funding projects that were on too high costs for gold, and they got bankrupt. They went bankrupt during the 2011 to 2015 bear market. And the bear market happened because of fundamentals. There was so much production and compared to just supply. And the supply demand ratio was not favorable, and companies had to be shut down like every time in a cyclical industry like gold and silver. And right now, what's going on is there's a $54 billion deficit in supply. So there's much more demand right now than supply, and this is not easy to meet. If you've seen mining, the mining industry in the last 2 decades, there haven't been any major gold discoveries or silver discoveries. On top of that, the time it takes now to build a mine is longer than it used to be. It's like 15 years to build a substantial mine. So you're talking about a long systematic problem, and you're still seeing fear in the entrepreneurship in Vancouver with regards to opening new gold and silver plays. People are not rushing in, so you're seeing a very sensible and a very conservative outlook by people, and I love those 3 things. So one thing is gold is not that easy to find right now. There hasn't been any substantial gold findings or silver. Then you got conservativeness in the sector, with the top people that have done this for 4 or 5 decades, and you're seeing this very bullish underlying problem, a debt mania throughout the world. The IMF just issued a warning because the world GDP, that's not any country, that's the world GDP, is now only half of the debt. So think of the world as one country. Their debt, our planet's debt, is 200% larger than our economy can handle. This is insane. I don't think there's any other way out of this. And mining shares, obviously, think about it. When you are a shareholder of a mining company, what do you own? You own the asset that is needed to create a sound economy again. So honestly, if the supply-demand ratio doesn't change, and there's no reason why it would change this rapidly, it will take 3 to 4 or 5 years to play out, then yeah, I see a lot of volatility, and a lot of the central banks, they just can't have this gold prices rising so rapidly, so quick. So they gotta issue all these political statements like, hey, we're gonna raise rates, etc. But negative interest rates are here, and they've been here for several months, and real negative interest rates have been here for years. So no matter what they say, it's what they do that counts, Colin.
Yeah, well, everything you're pointing out is explosive for gold, and I really feel the same way, that there will be volatility along the way. We've had this pullback for the last month or month and a half, which, depending on which stocks you're in, hasn't necessarily been that bad, but the general trend is up. And circling back to Wealth Research Group and yourself, there's a lot of content that you send out, and I'm of the firm opinion that if you can't dedicate, like Rick Rule says, a certain amount of hours to every single stock you're looking at in a given week, then it really helps out to work with people that have the time and put the content out there. I'd like to ask you about illusion profit, something you had mentioned to me, and that I've seen before the call here.
Well, illusion profit is a concept we came up with that is very, very it's unique. Here's the thing. Most people believe that deflation is very bad for gold and silver prices, and that's true. Gold and silver prices do not do as well in a deflationary period as well as they do in an inflationary period. But gold and silver prices tend to be stagnant in a deflation, whereas other things like rents, wages, income, oil prices, other materials, basic materials, all the other expenses in your life are dwarfed in a deflation. So think of the bottom line for this, and think of how deceptive this will be for gold and silver investors. We've termed a new phrase for gold and silver investors that are really astute and are in it for the long term. We call them Metalionaires. And for you to be a millionaire, you got to understand the illusion profit. The mining shares will do so much better than the spot gold and silver prices because they're based on leverage and profits. And if you got a stagnant price for the actual metals, while the rest of the company's expenses go down substantially, then you got a very profitable company right there. And I don't think that many new investors to the sector can understand this. So you have to be very, very astute, and we talk about it, on the Wealth Research Group website, and for the free members, which is easy to do. Just go on the homepage and sign up. We talk about this a lot, and we see this. And I've been on mine tours right now, in early October and late September, and I've seen this firsthand, and I've talked to the geologists and the CEOs and the presidents. This illusion profit is very, very good for your listeners, Colin, because you can educate them about this while other people will be scared away. And that's exactly what you want. You want to position yourself early in these mining shares before people actually see their results and financials, and then they pile in, like these institutions that will be very scared by deflation to invest in mining shares, but you can position yourselves well before institutional money. On top of this, the central banks of Switzerland and Norway have already formed a mining shares portfolio. I don't know if you're aware of this. We actually put out this news bulletin about 3 months ago. The Swiss Central Bank, the SNB, has bought $1 billion worth of 25 mining shares. Now, why is this important? This is important because it gives these companies so much cash. And with this cash, they can move to new projects and diversify themselves and buy small companies. And this is very, very bullish. Think about it. The central banks are not buying gold and silver. They don't want the reserves because it dampers their ability to print money. But on the flip side, they go ahead and they buy the mining shares. This is insanely bullish for the entire sector because it gives you an underlying buyer. And these companies, think of the cost basis for central banks to buy mining shares. They print money at zero cost basis, and then they buy the shares. So that's why you've seen some of the shares go up 600, 700, 800%. Now they're flooded with cash, these companies, the majors, and they can make acquisitions, and that's important for the entire sector.
Lior, I'm a huge fan of your work. Great compliments on the special reports you provide on your site and the content. Just phenomenal. A lot of listeners of Palisade Radio ask where they can find other info on the mining space and the mining stocks. And it is a niche space, of course, especially right now when things have been so depressed. I mean, the entire sector, at least as of February, was at a historic low in terms of the market cap and the valuations against the gold price. And of course, that means that there's just tremendous opportunities to be had, and your group's providing great information. Lior, where can our listeners go to find out more information about your group and to get involved?
Sure. So go to the website, wealthresearchgroup.com. On the top menu, click the special reports. What I love about these is you can access, if you're just starting out, and even if you're a veteran, it's always good to go back to basics. There's five special reports that are the investing principles of success. way more important than any stock pick you ever get is the fundamentals on how to avoid catastrophic losses, how to really allocate your money intelligently, and work with the principles that have helped the top guns. Other than that, there's special reports about uranium and other resources, about China and what they're doing right now. And if you are into the stocks, there's 3 special reports: steroid stocks, targeted buyouts, and the Metalionaires, that you'll be very interested in reading because they talk about all the facts that you need to gather up in order to be a millionaire these next few years. Obviously, on the homepage, you can just sign up, take us for a test drive. It doesn't cost anything. Our mission since day one is to strengthen the financial fortress of our readers, because we believe that right now you cannot trust anybody, not the government, not your parents or anything you've been taught over the years, because this is a new economy, and you got to be very astute, very savvy with your portfolio, with your income, with everything that has to do with your finances. And there's no better way to do it than just absorb more and more data and information and apply it in your life. So that's basically the best way to do it.
There you have it. It's wealthresearchgroup.com. That's wealthresearchgroup.com. Lior Gantz, everybody. Thank you so much, Lior, for coming on the program, and we'll get you back here soon.
Thank you very much. I enjoyed it.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?